A question that has been circulating widely among investors is whether Palantir stock represents one of the best buying opportunities available in March. For many market observers, the answer comes back with a confident yes. Over the past several years, Palantir has emerged as one of the most powerful success stories tied to the explosive rise of artificial intelligence. Since the artificial intelligence boom accelerated in 2023, Palantir stock has produced extraordinary returns for shareholders. During that time frame, the company's share price has climbed by more than 2,000%. That kind of performance places Palantir among the most impressive winners of the modern technology cycle. However, despite that remarkable rally, the stock had actually reached even higher levels before experiencing a significant pullback in recent months. Following that correction, Palantir stock now trades roughly 35% below its all-time high. This decline has created a moment of reflection for investors across the market. Some individuals who missed the earlier surge are now wondering whether this drop presents the perfect opportunity to finally establish a position. At the same time, long-term shareholders who have already benefited from the company's growth are considering whether they should add more shares while the price sits below its previous peak. To evaluate this opportunity properly, it is important to first examine the company's business model and the reasons behind the recent drop in the share price. When analyzing Palantir's operational execution, it becomes surprisingly difficult to identify major weaknesses. In fact, the company has positioned itself at the center of one of the most transformative technological shifts of the modern era. Palantir's software platform has become one of the most effective tools available for integrating artificial intelligence into real-world organizations. Its systems are designed to process enormous volumes of data, analyze complex patterns, and deliver insights that human analysts alone would struggle to uncover. In many cases, the datasets involved are so large and complicated that they simply cannot be interpreted effectively without advanced artificial intelligence assistance. The origins of Palantir's technology trace back to government operations. In its early years, the company primarily built software solutions for intelligence agencies and defense organizations. These institutions relied on Palantir's tools to analyze large streams of information and identify critical patterns related to national security and operational planning. This expansion has been particularly noticeable across the United States commercial market. Corporations increasingly recognize that artificial intelligence can dramatically improve decision-making, streamline operations, and uncover efficiencies that were previously invisible. Palantir software plays a key role in enabling that transformation. The company's recent financial results illustrate just how powerful this trend has become. During the most recent Q4 report, Palantir delivered exceptionally strong performance across several major metrics. Total revenue increased 70% year over year, reaching approximately $1.4 billion. Such growth would be impressive for a young startup, but it becomes even more remarkable when achieved by a company that already operates at a multi-billion-dollar revenue scale. Digging deeper into the numbers reveals an even more striking development. The company's United States commercial division emerged as the standout performer during the quarter. Revenue from this segment surged 137% year over year, demonstrating how rapidly businesses are adopting Palantir's artificial intelligence capabilities. This momentum highlights an important shift within the broader artificial intelligence landscape. While many technology giants are racing to build the hardware infrastructure needed to support artificial intelligence systems, Palantir focuses primarily on the software layer. Rather than spending enormous sums constructing data centers or manufacturing chips, the company concentrates on delivering powerful analytical tools that organizations can integrate directly into their operations. That distinction matters because it places Palantir in a unique position within the artificial intelligence ecosystem. Large technology firms may dominate the infrastructure side of artificial intelligence, but Palantir has carved out a leadership role in the application layer where real-world organizations actually use artificial intelligence to solve problems. Another strength of the company lies in its subscription-based business model. Instead of relying on one-time software sales, Palantir provides its platforms through ongoing service agreements. This structure allows the company to generate recurring revenue streams as customers continue using the software over extended periods of time. Recurring revenue provides a level of financial stability that investors often find extremely attractive. When companies build long-term relationships with clients through subscription services, revenue becomes more predictable and less dependent on constant new sales. As Palantir's customer base expands, this recurring structure could allow revenue to grow steadily year after year. Given these advantages, it becomes easier to understand why many investors view Palantir as a compelling long-term opportunity. The company operates at the intersection of artificial intelligence, data analytics, and enterprise software, three areas areas that are expected to experience enormous growth over the coming decade. However, even the most exciting technology companies must eventually confront the issue of valuation. In Palantir's case, the recent drop in the share price does not reflect weakness in the underlying business. The company continues to grow rapidly, win new clients, and expand its influence across multiple industries. Instead, the primary concern revolves around the price investors are paying relative to the company's current earnings. At present levels, Palantir stock trades at more than 100 times forward earnings. That figure represents an extremely high valuation by traditional market standards. When a company trades at such elevated multiples, the market is essentially pricing in years of exceptional growth. Investors are not simply betting on strong performance during 2026. They are also assuming that Palantir will continue expanding at a powerful pace well beyond that time horizon. This situation creates both opportunity and risk. On one hand, if the company continues delivering rapid revenue growth and successfully expands its customer base, the current valuation may eventually appear justified. On the other hand, if growth slows even slightly, the stock could face additional pressure as expectations adjust. The key question, therefore, becomes one of sustainability. How long can Palantir maintain its current growth trajectory? Artificial intelligence adoption is still in its early stages across many industries, which suggests that significant demand could remain ahead. Companies are increasingly recognizing that data represents one of their most valuable assets. However, raw data alone provides little value unless organizations possess the tools required to analyze it effectively. This is precisely where Palantir's platforms come into play. By transforming vast datasets into actionable insights, the company enables businesses to optimize logistics, manage supply chains, improve forecasting, and enhance decision-making across countless operational areas. These capabilities can produce measurable financial benefits for customers, which strengthens the incentive for continued adoption. Still, investors must also consider the possibility that growth could slow as the market matures. Artificial intelligence adoption may accelerate rapidly during the early phases of the technology cycle, but eventually the pace of new deployments could stabilize. For example, it is difficult to imagine a scenario where a large number of major corporations delay their artificial intelligence strategies until 2026 or later. Most organizations that view artificial intelligence as essential to their future competitiveness are already moving quickly to integrate these technologies today. As a result, the size of the remaining untapped customer base becomes an important variable. Palantir continues to attract new clients, but the total number of potential organizations that require its specific solutions may not be unlimited. If the company successfully expands into additional industries, develops new applications for its technology, and deepens its relationships with existing clients, revenue growth could remain strong for many years. In that scenario, today's stock price might eventually look like an attractive entry point. However, if growth begins to slow toward the end of 2026 or shortly afterward, investors might reassess whether the current valuation accurately reflects the company's long-term earnings potential. This is the central balancing act that investors must evaluate. Palantir clearly operates within one of the most powerful technological megatrends of the modern economy. Its software platforms address real problems, deliver measurable value, and continue gaining traction across both government and commercial sectors. At the same time, the stock market often moves ahead of reality by embedding extremely optimistic expectations into share prices. When valuations climb too far beyond current fundamentals, even excellent companies can experience periods of volatility. Ultimately, deciding whether Palantir stock represents a compelling purchase in March comes down to an investor's belief in the company's future growth potential. Those who are confident that artificial intelligence adoption will continue accelerating and that Palantir will remain a dominant player in the application layer may view the recent pullback as a rare opportunity. For investors who believe the company can continue expanding its customer base, growing revenue at a rapid pace, and strengthening its position within the artificial intelligence ecosystem, the current price might eventually prove to be a bargain. On the other hand, investors who expect growth to slow significantly in the coming years may conclude that the stock still carries a premium valuation even after its recent decline. Markets rarely offer certainty, which means every investment decision ultimately involves weighing probabilities and long-term expectations. What remains clear is that Palantir has already secured a powerful foothold within the rapidly evolving artificial intelligence economy. Whether the company's stock continues climbing from here will largely depend on how successfully it converts that technological leadership into sustained financial expansion over the years ahead. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.